Welcome, everyone. This is your host, Adam Coleman. And with me today, we have Jeanette Lucas, who is a senior financial advisor and partner at Condor Capital Wealth Management. Today, we're going to talk a little bit more about estate planning and go into a deeper dive of how the financial planning world relates to estate planning. So, Jeanette, thanks for being here.
Thanks for having me.
Before we go into detail, tell us a little bit more about what estate planning is in your world.
Sure. So basically, estate planning is just an outline of what your wishes are and how you wish for them to be achieved when you're no longer able to make those decisions for yourself, whether through mental capacity or through death. So we'll get into it more later on, but we review the options that a client has. Sometimes they'll have worries about certain children and how they're going to manage those assets once they're no longer around. So we review what's available to help in those situations. And then after everything is implemented with an estate attorney, we make sure that their accounts are titled properly according to the estate plan, and also beneficiaries are up to date.
How do the roles differ? What are you taking care of as the financial planner? And then what is the estate attorney actually handling on their side?
Right. So we can't actually draft any documents. We're not attorneys. So we'll review the different options available to them. We'll come up with a plan that then we'll go over with the estate attorney, and then the estate attorney can put their own thoughts and advise differently if they think that what we came up with is not able to be implemented on a legal standpoint.
How does the process look differently if somebody just goes directly to an estate attorney and bypasses the financial planner? What are some of those advantages and possible detriments by going that route?
Right. So if they go directly to an estate planner, a lot of times the estate planners aren't going to know their situation. A lot of times we've been dealing and working with this client for a long time, so we know what's important to them. So they might go through things and they might just say, I want to leave everything to my kids. So they just do that. And I'm sure the estate attorney will ask some questions, but us knowing more about the history of that client, we might be able to ask questions that the client might not think about because they don't know that that's an option.
What other professionals get involved besides you as the financial planner and the estate attorney? Is there anybody else that needs to be included?
So a lot of times an accountant might be needed just to go over the best way to look at things from a tax standpoint. It depends on the client situation, though, of course.
I guess there's tons of different ways to do estate planning. So you've got the will, you've got the trust. A lot of people don't fully understand the differences between those two. What do you typically advise when you're going through the different estate planning options with your clients?
So depending on their situation, right? If it's very simple and they trust their kids and have no issues with any of their kids' marriages or anything like that, they could just leave it outright to their kids. And a lot of times they don't need a trust. But let's say that then the other option, there's a will-based plan where everything goes through based on a will, but you could also do a revocable trust-based plan where the will is just basically a pour over will, and anything that's not put into trust during the client's lifetime will just pour into the trust. And then the trust basically takes over the will. The will is very basic in those situations. A lot of times the revocable trust is useful in cases where the client has assets or properties in other states to avoid ancillary probate. They don't want to have to go through multiple probate processes. Some states probate isn't as bad as other states. New Jersey is known to not have too bad of a probate process, but places like California or Florida, it can be time consuming and could be expensive. So a lot of times revocable trusts are more often recommended in those states. So with the revocable trust, the trustees are the ones that will handle everything. It does make things more easily transferable once someone passes. You don't have to go through the whole probate process.
Yeah.
Trusts are definitely very useful. And if you have certain things that you want in place after your death and you want to control what happens to your money, then that's a very useful option.
Usually the only downside I hear is just the cost. It's obviously more expensive to do the trust versus like a will, but then the amount of money that you hopefully typically would save in probate and the hassle down the road far outweighs that, but that's usually what stops people initially. That, and obviously going through the process of updating it on a regular basis. I'm assuming you, as the financial planner, help with that along with the estate attorney as well.
Correct. So a lot of times we'll be the first person that the client goes to say that they have some changes that they want to implement. And then we'll review their options again and then go to an estate attorney afterwards. So the way we charge is fee based on assets under management. So any review of the estate planning, we don't charge extra for that. Whereas an estate attorney is going to be charging by the hour. So they do like to hash that out first before going to the estate attorney.
I've seen some financial planners, instead of going through an actual estate attorney, they'll go through some of the online sites like the Trust and Will, or there's a few of them, I think wealth.com. Have you ever used anything like that, or is it more a specific trust attorney or estate attorney that you use usually?
Yeah, so it depends on how complex their wishes are. If it's very simple, basic estate planning, those could be good options. A lot of times, especially if it's an older client, they would prefer to work with a person that they could meet with. So it really depends on the client. Some of the younger clients are definitely more comfortable with online resources.
What are some of those complexities that kind of force you to think, all right, this is not going to be a good enough plan for me. I should go through an actual estate attorney. Are there specific examples that somebody should kind of have in the back of their mind?
Definitely. So if you just want to leave assets outright, it's much easier than if you want specific rules on your trust, or if there's a special needs trust, that's a little bit more complicated too, because you want to make sure that it will meet the laws so that doesn't affect the government benefits for someone with special needs. If you want specific language, a lot of the common language we see is if you're leaving money in trust for your kids and you want it paid out in certain increments, age 25, you get a third of the trust, age 35, you get another third, that type of thing. A lot of times it's easier to work with an attorney. The online resources sometimes aren't as capable of doing things like that. If you don't trust one of your kids for something, or if you want the assets to be used for a specific purpose, like education for college, if you want assets to only go to someone if they graduate, or you could put all different types of rules. So the online resources aren't going to have as many of those capabilities. But if it's simple, you just want 50% to go to one kid, 50% to go to the other kid, and that's it. I don't want any other special rules. Online is perfect. They do have some trust language on those too, but a lot of times if it gets too complicated, I know I've seen issues with companies like LegalZoom where you want to make an adjustment. They just take you through a series of questions, right? And then they fill it in, kind of like online tax planning software. And then they have certain limits. I know I've seen on, for example, power of attorney, they allow a primary and then a successor to be your power of attorney. And then they have no way to fill in if you want two successors. So you have to make a call. And then if they don't do it correctly, you got to keep calling to make sure it gets updated correctly. So there's a bit of a hassle point there where you're limited to what if you want to do it just online, you're limited to what the layout they give you is. If you want to expand on that, sometimes you can add things through a phone call to the company, but it does add some more hassles.
And they don't really do as much in terms of changing the beneficiary names to put it into the name of the trust and all that. I think they probably walk you through what you should do, but it's not like a lot of hand holding from what I understand. Is that right?
Correct. So it's up to you to implement those things after you're done. So, and a lot of times that's, as a financial advisor, we help a lot with that because we are managing their assets. So we do help retitle accounts into the name of a revocable trust, update beneficiaries to trusts if necessary.
How often do you recommend somebody updates their estate plan?
Well, they should review it constantly if anything changes, but they should probably at least every 5 to 10 years, definitely make changes if there is a change in your situation. It really depends.
And And that could be anything. I mean, that could be just like opening up a new brokerage account, opening up a new checking account, things like that. It's all the stuff that they have to then change the beneficiary name and change the titling to, correct?
For those things, yes, so that you wouldn't really need to make any changes in the actual estate plan, but you do need to make sure that the accounts themselves have the correct beneficiaries and titled properly. Correct.
Gotcha. Okay. Yeah, going back to your example of, let's say you had minor children that you wanted to include, like some special provisions, what do you typically see as go-to options for that? Obviously, like going through the trust, you can set up things, but you don't want to provide a lump sum, obviously, to maybe even if they turn 18 or whatever like that. What kind of examples do you see with your clients that have gone through that path for planning for estate planning? What methods are they using to plan for their children if, God forbid, something happens to them?
So a lot of times they'll leave assets in trust for minor children and have a trusted person as the trustee to handle the finances. And obviously they'll name a guardian in their estate plan as well to take care of the kids themselves. And then usually there'll be language in the trust guiding the trustee on what they want the assets used for. A lot of times it's for education support, that type of thing. And then it'll state once they turn 18, they could become their own trustee on their own trust, depending what the parents' wishes are. But a lot of times it'll be at certain ages that they get portions of the trust. The most common I've seen is a third, where a third gets distributed at, let's say, 25, and then another third at 35, another third at 45. It also depends on the situation. If it's a special needs child, then that's going to be very different too. It'll be a lifetime trust. Sometimes it will be a lifetime trust regardless, because they don't want the kids ever to get full access and they want to protect assets for their grandchildren.
True. Yeah. And I guess from a tax planning standpoint, do you find that it's better to do the lump sum, like the third, or have more of like a monthly or annual withdrawal,
So
sequence as well?
the type of assets matter that's in the trust. But yeah, so if there's income, a lot of times it's beneficial to pay out the income because assets in trust do have higher tax consequences. So that's also one of the downfalls there too. So let's say there's an IRA that was inherited by a child. Now there's rules. If they're of age, then they need to empty the account within 10 years. So that could be a large amount of taxes. If you're keeping it in trust, if the distributions coming out of the IRA stay in trust, that's going to be, depending on the size of the IRA that was inherited, it could be very significant tax consequences. So you might want to have those paid out so that it gets taxed to the child if they're of age. A lot of times you'll want to keep it in trust as long as they're under 18, but that will allow them to be charged the taxes at their own tax rate versus the trust tax rate, which is a higher rate. So that's one of the things with ever-changing laws, right? It used to be that IRAs were able to be stretched out over someone's lifetime, but now they have to empty it within 10 years unless it's the spouse, or there's certain rules too for minor children. It'll allow the 10 years to start later.
Okay, interesting. Are there rollover options or anything that they can do to prevent that?
So during their person's lifetime, they could do Roth conversions where you put it into a Roth IRA, then the parent pays the tax. So it really depends on if they want to incur the taxes themselves and save their kids from having tax consequences. If they do a Roth conversion, then they pay tax. And then the Roth conversion also does need to be emptied within 10 years if the child inherits it, but there's no tax consequence. So it could stay in trust more easily because there's no taxes. So the trust, you won't have to worry about the trust tax.
It's just taxed as ordinary income at that point. There's not the capital gains feature to it.
If it's coming out of the IRA, then it's in ordinary income, correct?
What about any other assets? I guess what kind of creative ways do you get around, the different asset allocations within a trust so that they don't have as much of a tax consequence, or is there a way to do that?
So taxable accounts, those have a step up in cost basis. So those are more tax efficient for sure. So let's say the client is charitably inclined. A lot of times a good plan is to have IRA assets be used for a charity, right? Since they don't pay taxes anyway, and you won't have to worry about that. So then leave the taxable accounts and Roth IRAs to your kids, because the Roth IRAs have no tax consequences and taxable accounts have the step up in cost basis. So at the time, it'll minimize the tax consequences unless, of course, the accounts grow really quickly after you pass, because it gets stepped up to date of death valuation.
Perfect. And basically what I'm getting at is that there's a lot more complexities to it. So trying to do this all on your own without a financial planner would be very difficult. I could see doing it the right way for sure. Even through an estate planner, like an estate attorney, you're not going to get that type of knowledge or education when you're going through that process, because they're not going to understand the tax implications, the asset allocation issues, things like that. So that's one of the major benefits of having a financial planner involved with the estate planning process as well. Is that correct?
Right. Because, a estate planner, they are experts in the law, but financial side of things, they might not know as much as the financial planner. So it is good to have them work together for sure.
Perfect. Well, how do you assist clients planning for incapacity or disability? And obviously, estate, we're getting into somebody passes away, but what other mechanisms are there for incapacity or disability that are different from death?
Definitely. So one thing that we always recommend our clients is not only the will part of the estate plan, but also the power of attorney. You're naming someone who's going to make decisions for you when you're no longer able to, but you're still living. So that'll allow a client to name someone to have access to their financial accounts. And if it's a durable power of attorney, they will have access immediately. So it has to be someone you trust for sure to name. But they could even act on your behalf if, let's say, you're overseas and can't be there to do something in that time period. Then there's the healthcare proxy as well. That's important for making healthcare decisions if you no longer can make those decisions. And on the power of attorney side of things, we definitely always ask clients for a copy of that, because it could become necessary and then they'll be able to act on their behalf on the accounts we manage for them.
And you typically keep a copy of these documents yourself as well for the client as an added service as well, right?
Correct. Yes.
Now, how often, obviously, as things change, but is this something that you usually advise people review on an annual basis just to make sure that they've updated their power of attorney documents and things like that? Or is it not quite that specific in terms of timeline?
We definitely will review. We normally have reviews with clients at least once a year. So then we'll ask them if everything is still up to date and if there's any changes, right? If there's something, we have had clients change who their power of attorney is depending on the situation. So especially if, let's say, someone gets divorced, right? You might not, it used to probably be your spouse in a lot of cases. So you probably want to have that updated right away.
So what are the regular checkup items that people would have besides knowing that they need to review their trust documents, but in terms of their asset accounts, things like that, like named beneficiaries, do you recommend that they review that on an annual basis to make sure that they've got either their spouse or children, however they want the beneficiary set up? Is that something that you do annually usually?
Yeah, so a lot of times it'll be, well, that's part of the whole thing when we ask them if there's any updates, right? And we'll review what their current beneficiaries are and see if they want to make any updates to that. And then titling, if they, let's say they buy a new property somewhere, right? We want to make sure that if you have a revocable trust, you want to make sure that it's funded with those assets.
You said obviously the big downside of not having a trust set up is the probate process. You mentioned this before, where some states are easier than others. What does the process look like where you are in New Jersey, and how does it differ from the states that seem more complicated in your mind? So is it just the costs that are involved, or is it the time, or a little bit of both?
So time and cost. So some states will charge a percentage based on how much assets go through probate. So that could be costly if you have a lot of assets that go through probate. So for New Jersey, it's not that way. So it's much cheaper. And then time, from what I've heard, is Florida takes a very long time to get through probate. So New Jersey is much quicker.
Gotcha. Okay. And correct me if I'm wrong, you're obviously able to help clients in really any state. So you do the estate planning work no matter where they're located, but then you set them up with a local estate planner, correct?
Right. A lot of times it's best to have an attorney in the state that you're in, just because they'll know the laws in that state better.
Are there any mishaps that you've seen people make from an estate planning aspect that you don't want people to follow suit on? What are kind of the major issues that people have done in the past that you've run into related to estate planning?
So a lot of times it's just not having it in place. That's the first one. Not having estate plans. A lot of people don't like thinking about this situation. They don't like to think about what happens at their death. So just having one in place is number one. And then making sure that it aligns with their wishes. One of the biggest things I've seen is they have this whole estate plan done and then they don't update their beneficiaries. And so it's completely different than what the estate plan says. Or they have a trust and then they don't fund it. So they did all this work and they didn't do the next steps of actually implementing what they wrote in an estate plan.
What's maybe the first step for people that are in that same boat of, I don't want to deal with this right now. It's just not something that I want to have that conversation on. What's like step one?
So step one is to think about the uncomfortable because this is important, especially if you have minor children, right? You want to have a guardian. That's super important. And that is one of the biggest pain points is sometimes people don't know who they want the guardian to be or who they trust enough for the guardianship and for to be a trustee. So that's really one of the biggest hesitations I see is that they're not sure and they have to give it some thought and then they delay the whole process because they don't think that they should do anything until they find that out. So definitely give some thought on what would happen and what would happen if you don't put it in place. And is that something you're okay with? So do you want the court making the decisions for who's going to watch your kids? Probably not. So you really want to think about that quickly and have it done because you don't want those decisions to be made for you. And then also on the power of attorney or healthcare proxy, a living will, if you do become incapacitated, you really want someone to do what you would want to happen to you. Like, do you want to stay on life support for a very long time? If something happens, you really want to make those wishes known.
How easy is it to change the trustee? So if you set somebody up and then decide, years down the road that you'd want to switch it, is it a pretty easy process?
Yeah, it's pretty easy. You just will have the estate attorney make an adjustment. You could name, and then you could also name successor trustees. So let's say you're worried if someone passes away that you named, usually we normally recommend a few just in case. But if you no longer want that trustee to be on there because something happens and you no longer trust them, you could have that updated.
Do you have to go through the same estate attorney in most cases to make those changes?
It'll be easier to use the same one, but you can go to another one. Sometimes estate attorneys don't like to update other people's documents, so they'll just want to redraft the whole thing. But so
That's
sometimes,
what I've heard. So yeah, a lot of times it's good to find the one estate attorney. I guess that was the other question is when people were thinking about the estate attorney, should they consider how long they're probably going to be available as an estate attorney? Yes, should you obviously align somebody in the same state that you're needing, but are there more factors that go into it besides just having a good estate attorney in terms of age and like longevity and how long are they going to want to be in the field as well? So
right. So yeah, if they're close to retirement, you probably want to make sure that they have a successor in place for themselves, right? If they don't have a team, which we have seen happen where when a state attorney passes away and they don't, then the people left behind have to look for the documents because they don't even know where they are.
right. Well, perfect. Well, this has been super helpful. I really appreciate you taking the time. If somebody wants to know more about you and your services, where's the best place to look for you?
So they could reach out to me through email. I'm Jeanette@condorcapital.com. They could go, we have our website, condorcapital.com as well. Or they could call me 732-356-7323.
Perfect. I'll make sure to include all the information in the description as well. So if anybody wants to track you down, get some more information on you, any financial planning purposes, obviously estate planning comes along with it, but highly recommend having a financial planner involved. Like I said, it's step one is obviously get to the estate set up, but having the financial planner involved to kind of make sure you get that done properly is hugely valuable in my opinion. So I appreciate you taking the time. Was there anything else that you wanted to run through on this one?
I appreciate you taking the time as well to have me on here.
Absolutely. Well, no, it's been a pleasure. I appreciate it.
Thank you. Take care.
All right.